Good afternoon and welcome to the Accendo Traders Group. This is our weekend wrap-up trade plan for July 27, 2008. AccendoTraders.com, effective trade plans delivered daily. And as we go through our trade plan each night, this is our weekend trade plans. We add a couple things into our mix here. We want to make sure we're on the right side of our trades, know what news is coming down the pipes. We're going to take some time and review what some of the blogs and newsletters are saying about the market. Check our sectors to see which ones are trending up or down. Look at the indexes, find support and resistance. Use our scanning system to identify new trades, set alerts for new trades. And as always, we want to make sure that we have time to go have life, spend time with our family and friends. So when we look at the market this week, we can see that basically we had a sideways week, although the market was kind of up and down a little bit. But we kind of basically ended up just a little bit or down a little bit for the down S&P 500. The market was unable to continue that upswing that it's been in. Even though oils continued to fall, the financial sector continued to be up. At one point, it was up 10%. We had good earnings, and the government is continuing to kind of support the housing industry. You know, one thing about the earnings is that a report came out that of the 248 companies who have reported earnings so far, 72% have actually beat earnings, and 4% have come in line. So that's over 75%, 3/4 of our earnings reports so far have either been in line or beat expectations. Also, with the government, again, we all know that they're passing a bill right now, a housing bill right now that's supposed to help with foreclosures. When we look at the corporate headlines of the week, we started the week off with Bank of America basically having a good earnings report and stayed and supported their dividend. But then that was followed up by Wachovia basically having a horrible earnings report and saying they're going to cut their dividend. And a lot of regional banks said that they were going to cut their dividend. The financial sector at one point was up 10% as we see, but they fell 7% on Thursday. And some might say because they moved too fast, too far. But those of us who look at charts and we talked about the support and resistance coming into last week, we were talking about the sectors. And we said that the financial sector was coming into resistance of the 50 exponential moving average. So we basically saw the financial sector go into resistance and fall back. We also had Apple give a cautious outlook, and we had bad earnings from American Express and Texas Instrument. What was interesting about the Ford, yes, they was horrible, but there was also some other fall. Like GM said that their sales basically is going to be, and auto and truck sales comes out on Friday this week, but GM said that they're going to be basically in line with June, which was a decline. And then Chrysler said that they're going to stop offering leases because they can't offer competitive rates. So that was interesting to me to say, you know, we're going to stop offering leases on cars. Interesting. And so, you know, now we're looking at what is the state of the consumer. We had some weak housing data. June sales slipped to a 10-year low, although there was some positive because it feels like that this decline is starting to slow down a little bit. But the state of consumer is definitely going to be looked at this week. We do have more earnings coming out this week. Oil drop, as we already talked about, even though we have Hurricane Dolly coming in there in the Gulf of Mexico, oil continued to drop. And so what we're seeing is the money moving out of, and we talked about this, the money's moving out of energy and back into the equity market as stocks are being viewed as cheap. This week, we don't have much on Monday, consumer confidence, but when we get here towards the end of the week, we got ADP, which is supposed to be a predictor of the non-farm on Friday, and we also have GDP on Thursday. So Wednesday, Thursday, Friday, we definitely have some economic news to be catalysts to move the market one way or the other. So tomorrow we don't have anything on the market as far as economic news. Before the market, we have Soho, which we have traded. That's a website. And we've got Verizon before the market. So not really that much before the market. But after the market, we've got Amgen, we've got Mosaic and PCU. And so we do have some big companies afterwards. We'll see what happens there. And you can see we have definitely some big companies coming on as we continue to be big into our earnings week. And these, again, are our split plays that we're looking at. So let's go ahead and take a look at our sectors. Okay, so let's go ahead and take a look at our sectors. Let's start off with agriculture. And the main thing I want to share with agriculture is that you can see a long-term support here at 350. So although we're in a long-term downtrend for the past month here, you can see that the support here may bounce, even down here, bounce. So agriculture is certainly bearish, but has found a support. We might see a little bounce here. Energies definitely weak. They're going to bearish. Oil is looking weak. Both refineries and the drillers bearish. Metals certainly looking bearish. Steel looking bearish. Gold bearish, but again, look, here we are once again, just like agriculture, support. And if I go further over this way, you can see support at this 525 range. So we might see a nice consolidation pattern. This is another area that we might be a little aggressive and go bullish. Although we're in a downtrend, we might go bullish on this one because of the history of the support. Next, let's show banking. And you can see that we did break above the 50 and come back. So short term, definitely bullish. But we got to be, a little concerned. It's still a long-term bearish line. I like the fact that we broke the 50, but we came back below it. So this one really could go either way. Let's talk about the financials. Again, like the bullish short term, but this one was not even able to break that 50 that we talked about resistance. So we're still in a downtrend here. Brokers, I like the fact that this one has broken the 50 and has stayed above it. So I'm a little bit more bullish here on brokers because of that. Now, to really confirm this, I'd like to see it get up here to 230. But short term, definitely bullish. Insurance, I'm going to go bearish with this one. Real estate, basically bearish also. Drugs, bullish. You can see a crazy chart, but it's still a crazy chart going up. Biotech is also bullish. Let's go down to casinos. Long-term bearish, came up to that resistance like everything else and falling back. Retail kind of consolidating at this point. Transportation did break as oil was going down. Transportation's going up. So I like that short-term bullish. But again, watch oil on that one. Airlines, the same thing. Trucking, kind of the same thing, but a little bit weaker. Railroads, bullish. And let's scroll down here and take a look at internet. And you can see kind of not basically doing anything. Software not doing anything. Okay, so now we're going to begin the education portion of our video. We're using the book Trading in the Zone by Mark Douglas. And we're on Chapter 3, Taking Responsibility. And he starts off, or we've been on this chapter for a while, and he's saying that when you place a trade, you anticipate to make money. And everybody else in the world, when they place a trade, is trying to do the same thing. Everybody wants to make money. So you could basically say that the purpose of you placing a trade is to make money. However, at the same time, the market's sole purpose is also to take that money from you. Remember that the market is just a stream of data. And it's a stream of opportunities. And just like in baseball, we see these opportunities. We see a fastball. We see a curveball. And it's our job to swing at it. Sometimes we hit a home run. Sometimes we hit a single. Sometimes we strike out. It's our job to have a set of rules in place, a system in place, so that when we have a strikeout or when we get hit by a pitch, that we take responsibility that, you know what, we missed it and we need to move on, and we'll do better the next time we come up at the plate. If you blame the market, then you don't understand the rules of the game. And any blaming that you do is basically, again, based upon you having the wrong mindset. And you have not come to the idea of taking full responsibility. Taking responsibility means acknowledging and accepting that the deepest part of your identity, not the market, is completely responsible for your trade. It's also responsible for whether you win or whether you lose. Although the market's job may be to take money from you, at the same time, it's giving you plenty of opportunities to make money from it. So, again, the key is come to the plate, take a swing, and go round the bases or go sit down at the bench. But don't, be one of these baseball players breaking up bad on their knees, or the pitcher coming in and hitting the water, the Gatorade cooler. You just got to take your swings, pitch the ball, catch the ball, move on, and staying as even-keeled as possible. So that's it for this week's video. For those people who would like to get to our podcast, remember our podcast is about 30 minutes. If those people want to download that, there's our link there, AccendoTraders.com, subscribepodcast.com. If you're ready to step up and be one of those who are buying our daily video trade plans with our stock plays for every day, you can go to AccendoTraders.com, video.html. And as always, we appreciate those who provide us feedback, and check out our blog. We also place our trade plans on our blog also, so you can check that out. And we got some great articles. We've talked about why every trader needs a trade plan, why the stock market hates us. And we're putting on some routines, and we have some more articles coming in each day. So check out our blog. And as always, trade your own risk, and I will see you guys next time. Thanks.